Hey, what's up, guys? This is Logan Allec. I'm a CPA and personal finance blogger at moneydonesright.com. Today, we're going to talk about something that affects a lot of small business owners. So, when a lot of small business owners start, they are a sole proprietor, meaning that for tax purposes, they report all of their income and losses from their business directly on their own tax return. And they do that by filing what's called a Schedule C, profit or loss from business, and attaching that to their form 1040, and whatever the net amount is on here, on line 31. It says, you stick it directly on your 1040. It goes right here. This is the form 1040 for 2017. Business income or loss. It's got attached Schedule C or Schedule E. Right, so this is typically the simplest way to start a business and report business income on your tax returns. You don't need to set up an entity. You should probably have a DBA and a business bank account, but you don't really need to do anything beyond that. All you got to do is correctly report your income and expenses on this Schedule C. Now, at a certain level of income, it makes sense for many small business owners, not all, but many, to create an entity, and on that entity, elect for that entity to be taxed as an S corporation. And the reason why is this is because income that's on Schedule C all of it is subject to something called the self-employment tax, and that's about 15%. So, if you make $100,000 in your business, in addition to the normal income tax you pay, right, whatever your ordinary income tax rate is for the year, you also have to pay an additional tax called the self-employment tax for all income you report on Schedule C. Now, when you set up an S corporation, it helps alleviate some of that self-employment tax burden. You actually won't be paying self-employment tax at all. You'll still have to pay what self-employment tax represents, which is Social Security and Medicare taxes through payroll taxes. But long story short, setting up an S corp can save you a bit of money, because now you aren't paying that full 15% on all your earnings. So, it's a smart strategy. It works for a lot of people who are pursuing their own business full time. Might not make sense if you have, a high W-2 and you have a small business on the side. It may not make as much sense. You should consult with your qualified tax advisor, of course. But for many small business owners, it does make sense to be taxed as an S corporation at a certain income level. And a question I get from clients who set up an S corporation for the first time is, well, Logan, before, when I just reported everything on Schedule C, there was a line here, right? Expenses for business use of your home. So basically the home office deduction. So on this line, you could attach expenses, basically home-related expenses, for the portion of the house that, or your apartment that you used for business purposes. So, for example, if you have, a room in your house and you use it exclusively and regularly for your business, and if that room represents, let's say 20% of the square footage of your house or apartment, you can take all your home expenses, homeowners insurance, your HOA, basically all expenses related to your home, and prorate it 20% and take that as a deduction on line 30. And there's also another method where you just multiply the square footage you use by a certain dollar amount. But the point is that on Schedule C, there is a line directly for home office expense, line 30 of Schedule C. And the question becomes, well, now that I'm an S corporation and I don't report my business income and expenses on Schedule C anymore, I report it on, this tax return, this whole separate tax return called Form 1120S, U.S. income tax return for an S corporation. There's no line for home office expenses anywhere. But I haven't changed anything. I'm still, running my business out of my home. I still have that area of my home used exclusively and regularly for business use. So what's the deal? What happens? I mean, should my S corp pay rent, to me, and then the S corp gets like a rent deduction on the return, but then I have to report that rental income on my own Schedule E. So does that really make any sense? How does this work? How can I still get the home office deduction now that I'm an S corp shareholder employee of my own S corporation? And so I decided to write an article about that on Money Done Right. You can find the link in the video description. But can my S corp pay me rent? How do I take the home office deduction in an S corp? So those are good questions. So you basically used to have three options to kind of mirror somewhat the home office deduction. Now you only have two because of tax reform, but I'm going to walk through these options. But there's only one option that really makes sense, and it's the last one we'll talk about. And as we go through these options, I think you'll agree with me that that's the option that makes the most sense. So the first option is, have your S corporation pay you rent. This is what some old school CPAs, tell their clients to do, because it's easy, it's simple, right? You establish, a market rent for that area of your home, right? That you operate your business in. The S corporation gets a deduction for that amount, and but you have to report that that rental income on Schedule E of your own tax return. But here's the catch. There's a section in the Internal Revenue Code in 280A that actually says that you can't take any of the typical home office deductions on rentals by employees to their employers. So before, when you took the home office deduction, you could write off a portion of your homeowner's insurance, which you typically couldn't deduct. Previously, you could write off a portion of your your HOA fees. You get we just had to get our furnace repaired upstairs because of a power surge. You could deduct a portion of that. Well, personally, if you didn't use, a part of your home for business, you couldn't. So, now simply by having the S corp pay you rent, you can't deduct any of those expenses anymore. The only thing that the S corp gets is that rental expense, and then, you have to report that rental income on your tax return. On Schedule E. So this doesn't really mirror the home office deduction very well, because you simply don't get all of those expenses, all those cool expenses that you would get, when you, took the home office deduction on your Schedule C. Of course, you do get to reduce your S corp's taxable income, right, which is helpful, but then it's kind of a wash too, because you have to report that income on Schedule E anyway. There might be kind of a play there between, creating passive income for yourself, and you can release passive losses, or, reducing the S corp's, income. So, maybe that would help your, it become reasonable for you to take a lower wage, salary, or something like that. But it's kind of nickel and dimey stuff. It's the savings there aren't as big as the home office deduction was for you previously. You can also now report a portion of your mortgage and your property taxes on Schedule E, which may be a benefit to you if you're going to start taking the standard deduction now and not itemizing, because they increase the standard deduction to $24,000 for married folks. So if you're out there and you're not itemizing, it's kind of helpful. Now you can deduct a portion of your mortgage and property taxes on Schedule E. So there's some other minor benefits that I talk about in the article. That's kind of the first option you have. It's the most common thing I see when I get new clients who have an S corporation. I see this kind of arrangement a lot, and it's really not the best. Before the Tax Act, you could claim the home office deduction as an employee business expense and stick it on Schedule A. That was pretty crappy too, because that deduction is subject to the 2% of AGI limitation. So basically, you take your adjusted gross income from the year, multiply it by 2%. Only expenses in excess, or only your deductions in excess of that amount, you could actually deduct. So you're not even getting the full deduction there. So that's a pretty, that's a fail option too. I see it right there, fail. Okay, option 3. Now this is the this is the best one. This is the cream of the crop. This is what you want to do. You want to set up an accountable plan. So what's an accountable plan? So an accountable plan is basically a plan you set up under a regulation, an IRS regulation that says, you got to have a plan document. It's got to be good and official, and it's got to have the right words in there, and you got to do it right. But basically, it's a plan that's set up whereby you submit, as an employee of your S corporation, you submit to your employer, your S corporation, a form that shows all your expenses you use in your business. All the expenses that you incurred as an employee of the S corporation, right? And this includes depreciation deductions, right? So you can depreciate a portion of your home that you use for business purposes. It's again, like I said, it's got to be set up right. It has to be documented that these were expenses incurred in the performance of your duties, for the convenience of your employer, etc. So that's all got to be documented, and you got to do it right, and you got to make sure you keep that the form of the thing right, or the IRS may not respect that arrangement. So in this scenario, you say you have a list of expenses, your portion of your insurance, a portion of the repairs you made to the house that you allocate to the space you're using as an employee of your S corporation. You have all these expenses, just like you had the home office expenses before on Schedule C. You give that, and including depreciation, you give that report to your S corporation, right? And then here's what happens. The S corporation takes a deduction for all of those expenses on its return. You don't have to pick up any of that reimbursement, and write the check to you as a reimbursement, and you don't have to pick up any of those expenses as income. So that's the best way to go. Is you get the deductions, all the deductions on the S corp, and you don't have to pick up anything extra on your personal tax return. So but you got to do it right. If you want to talk, there are some kind of hoops to jump through, is the way I put it in the article. Not really hoops, but just you got to set it up right. And if you want to talk to me about it, just go to the bottom of the article here. You can easily, schedule, get on my calendar, Pacific time or whatever time zone you're in, hit continue, and a calendar will pop up. With available times to speak with me about this. Free 30-minute consultation, no risk, nothing out of your pocket. So, I hope to share with you guys some more tax tips, and I'll see you next time. Bye bye.